Hello and welcome. You have tuned into Market Fatafat on ET now. I'm Shrishti Sharma and with me is Vinny Motiwala. And viewers, this is the show where we are highlighting all the counters that are buzzing either on the back of the news flow or on the back of the technicals in the next 1 hour with a team of researchers as well as our technical experts. But before that, let's have a look at what the markets are up to. So Vinny, no substantial recovery from the day's lowest point, and this afternoon we are just drifting lower. But the good part is that the selling is not increasing for the past 1 or 2 hours.
Absolutely not increasing, but at the day's lowest point, right, Shrishti? Nothing exciting that we've seen coming in the new year, beginning of the new year. Last week also nothing exciting in the last couple of trading sessions. Today also the Nifty, nothing exciting on that front as well. Actually is below the 21,600 levels. 21,585 is what the Nifty is at. Nifty Bank too clearly under pressure as well. We're seeing Nifty Bank is down 7/10 to 8/10% in trade as well. So that's what we're watching out for. The drag coming in from Nifty Bank. Nifty PSU Bank, let's pull that up as well, right? Sharp fall coming in those PSU names as well, Nifty PSU banks, and in all those names also we have seen a fall coming in specifically today as well. So let's keep an eye out on some of those names as well. Bank of Baroda, Central Bank, Indian Bank, all these are among the top drags that have been coming in for the Nifty PSU Bank. The Nifty FMCG, that's another sector, Shrishti, that's not doing anything exciting, you know, given that the Q3 updates that have been pouring is as well. So Nifty FMCG also among the top sectoral losers. Now, what's holding on to gains and what we've seen holding on to gains for some time is the Nifty Realty. That's managed to hold on to gains in the last couple of trading sessions. Obviously, you know, we've seen that strong up move coming in those realty names. Today also, you know, managing to hold on to gains is Nifty Realty, and Nifty Media also holding on to strong gains today as well. So media, realty and energy, these are the sectors which are holding on to gains. Other than that, everything as of now is trading in the red. Let's pull up the broader markets. What's that doing as well? Seems like performing in tandem with the benchmark indices. Nifty mid cap down 0.6% in trade. Nifty small cap is down 0.3% in trade. As of now, the advance decline ratio clearly in favor of the declines versus the advances. So let's keep an eye out on that. Nifty 50, when you look at the top losers, UPL again down and out on trade, down to 2.7% almost as of now as well. That's UPL for y'all. Then we have DBLabs, Hindustan Unilever, SBI Life, LTI Mindtree and TechM among the top losers on the Nifty 50 as well. So yes, Shrishti, a lot of these moves are, you know, stock specific, but overall a bit of a weakness in the market because nothing exciting that has happened to pull up the markets. Range is what has remained in the last couple of trading sessions. Today also seems, you know, it's in that range. So yes, you mentioned that, you know, selling has not increased too much in the last couple of hours. Hope that doesn't. Let's keep an eye out on that. But Nifty, muted, very muted in terms of the trade, down 0.5% as of now. Nothing exciting on that front. That's the roundup as of now for the markets. But a lot of individual movers we're going to be keeping an eye out on, right?
Well, yes, absolutely, Winnie. So let's get started actually with all the stock-specific action that we are spotting at this point in time. And with this, let me welcome our team of researchers as well as our technical expert for today. Onto the technical side, we are being joined by Kunal, Rambhia, as well as on the research side, we are being joined by two of our researchers. We are being joined by Ankita as well as Ansh. A very good afternoon to all three of you. But before that, before I come to you guys, let me take the first counter that is buzzing, and that's seeing sharp gains in today's trading session. And from the auto ancillary space, have a look at PM Industries. This stock was at one point in time up by 15 to 6% still holding a gains of around 8.4%, and that's after the company said that they will consider and recommend the issuance of bonus shares at their meeting on January 15th. On the back of this news flow, this counter is in focus. January 15th is the day that you should be looking out for because the company has announced that they're going to be considering the issuance of bonus shares. The board will be taking a decision on this one, and technically as well, if we see Winnie, then the stock is seen to be trading above 200-day moving average as well as holding on to the gains since the morning with a strong gain candle, and that's why PM Industries is in focus.
Absolutely, but let's move on to the second stock that we're going to talk about, Solar Industries. This one also is actually, you know, spiked up in trade. Just a few minutes ago, we saw that they had an order win that came in. The stock was at one point of time up more than 1% as well. They have won a 994 crore order for supply of product for defense-based application, and this will be delivered for a period of 3 years. This is, when I'm reading the release that is coming on the BSE, it's for an international client for the supplies of these products and defense-based application to the international client and entity, and 994 crores is what the order is at. So today, as of now, we saw that sharp spike up only coming in because of this order win. So let's talk about that as well. As of now, Solar Industries trading at 6,764 rupees after this order win, up almost 1% as of now as well.
All right, moving on then, and Kunal, coming to you for your first counter from the IT space, you have picked up Emphasis. All these IT stocks were seen to be a bit under pressure in the last week, but how are you looking at Emphasis? In the past 7-8 trading session, this stock was too under pressure, but are you looking for any reversal now?
Very good afternoon to everyone. So honestly speaking, it's a sell candidate. The only reason being, if you look at the overall formation since the mid of December so far, this counter is in sideways consolidation. It's losing its momentum. In fact, it's seen across the IT pack, and this counter is in the spot. Only reason being, there is a head and shoulder formation on the chart. So keeping an eye on 25.60 as a level. Presently, it's trading at 25.67. Manages to close below 25.60. I think this counter is poised for a decisive decline till almost 2400. So with the stop loss of 25.85, one can initiate a short. That's 1% stop loss with the target of 2400 and even lower.
Okay, keep an eye out on those levels for Emphasis mentioned by Kunal. Let's move on to stock number 4, coming in from the FMCG pack, and Ansh. Godrej Consumers, clear pressure coming in on the stock after the Q3 update. How was the update looking like? What were the numbers indicating for the operational update?
Yes, that's right. And actually, the stock is run by around 3.8%. And CLSA has also come up with a brokerage note on the stock. And they have maintained the sell rating with a target price of around 936 rupees, which is more 19 to 20% down from the current level. Pointing to weak sales and inline domestic volume, CLSA highlights a decline in organic sales growth due to currency impact from international business. On charts as well, stock seems to have given a breakdown from an upward sloping support trend line. It has also snapped 11-session gaining streak supported by heavy volumes. So for those reasons, the stock is in focus today.
All right, GCPL clearly under pressure, but Kunal, all these pharma counters are also seeing some bit of a profit booking after a good move in the last week or so. What exactly are you looking and you spotting for DB's Laboratories?
See, the interesting observation about DBLabs is that this counter wasn't able to actually cross 39.30, 39.40 kind of mark since pretty long period of time. If you look at today's session, it's in the cash, it's trading at around 39.20, but that is the breakout point. There was a breakout point which we witnessed on 2nd of Jan. So I think one can initiate a buy, which is again the retesting of the breakout zone. So one can initiate a buy at the present level. The stop loss of this can be 38.80. And if the counter manages to continue its uptrend, then the targets can be again as high as 4,050 to 4,075.
Okay, keep an eye out on those levels for TVs Labs. But let's move on, talk about Sula. This one surely is quite high in trade, is what we could say. For the last couple of trading sessions, it's been on a high as well. And today, specifically a note that has come in from CLSA as well. Ankita, take us through what the brokerage note is saying for Sula Vineyards.
That's correct, Vinny. This stock is high not on the wine but on the upgrade that it has got from CLSA. Well, remember on Friday the stock had hit its record high and it is expected to rise even further from the current levels, and that's what CLSA is saying. Now the brokerage has upgraded the stock to buy from its earlier rating of outperform. It has also raised its target price higher to 863 rupees from the earlier price of 571 rupees per share. Now the revised price target implies a good potential upside of 55% from the current levels. Now CLSA's upgrade comes after the Maharashtra government announced a revival of the wine industrial promotion scheme for a period of 5 years. Now, as per this scheme, the wineries are charged a VAT or a value-added tax of 20%, of which 16% will be refunded as a rebate. Now, the state cabinet also approved the refund of the rebate under the scheme for 4 years, starting from the financial year 2021. Now, Maharashtra is Sula's largest market, accounting for nearly half of its revenues and nearly 45% to 50% of the volumes, according to CLSA. And in their view, this removes a major distraction for all the investors who can now focus on the long-term opportunities of wine consumption and wine tourism in India. The brokerage is also highlighted that with the rising middle class, fast growing of restaurants and rising incomes, wine consumption is likely to grow at a CAGR of 15% over the next 10 years, highlighting that Sula to be the biggest beneficiary, as it is, it has a market share in excess of 50%, and it is going to be the market leader. And that's why on the back of this news flow and upgrade, Sula is high on trade, up more than 15%.
Absolutely, and last couple of trading sessions, almost 30% uptick just itself for Sula Vineyards. And like Ankita was also saying, Maharashtra is a major market, so improvement in volume growth also for the company. Volumes will improve because of this as well, so let's keep an eye on that. Let's move on to the next stock that's been buzzing away in trade today. Is GMR Airports infrastructure. Jumped up as much as 4% intraday. As of now, it's up more than that as well, 5% uptick, 52-week high is what the stock is trading at as well. And this is especially according to an exchange filing that came in overnight, was that the company stated that the Delhi International Airport Limited, that's a step-down subsidiary of the company, has been exempted from paying a monthly annual fee, or MAF as what is known in the industry as well, for a period of March 2020, from 19 March 2020 to 28th of March 2022. And this is after the tribunal has actually passed the decision on 6th of January. Now, more than, other than that, obviously because of this exemption also, the stock is buzzing. But today we also saw a block deal that happened in GMR Airports as well. More than 5 crore change of hands as a share change of hands as that has happened in GMR Airports as well. So yes, two reasons we're keeping an eye out on GMR Airports. One, obviously in terms of the exemption that they've gotten from the monthly annual fees payment. Another one is a block deal. So keep an eye out on GMR Airports today.
All right then, but moving on, and Kunal, what's the take coming in on Borosil Renewables from the broader market space? This stock has also done pretty well for itself, and if we see the longer term chart, then it's looking as a breakout candidate. What's your take on Borosil Renewables?
Absolutely. As you rightly said, it's a breakout candidate. If you look at the overall formation, almost 21 months downtrend line was taken out in the beginning of January, where the counter was up by around 12% and the breakout was placed at around 465. After giving the breakout, it went up to 493, and now it's in the trade where it's retesting the breakout zone. I think it's trading at around 473. I think it can be a good bargain buying opportunity again post breakout. One can initiate the buy at the present level, keep buying even till 465. The stop loss on this can be 455, and the targets can now be placed at as high as 550 to 575 levels.
Okay, 550 to 575 levels is what the level one should watch out for Borosil Renewables. Let's move on to stock number 9 for today, and Godage Industries. Ansh, what's the reason for this being in the news today? See the uptick that we've already seen. What's the news for you?
Yes, so the Godage industry is set for significant expansion in Gujarat as the company has signed non-binding MOU with Gujarat government. The company plans to invest around 600 crore for next 4 years, aiming to employ around 250 people in this project. This strategic move builds upon the company's existing manufacturing facility situated in Valia, known for producing a diverse range of oleochemical products serving sectors such as personal care, pharmaceuticals and food industries. Vishal Sharma, CEO of Godage Industries Chemicals, has expressed his confidence in the partnership, emphasizing the commitment for growth, innovation and regional economic development. Also, if you see the chart, stock has touched record high level today and has been advancing for 6th consecutive months. So for those reasons, the stock is in focus today.
All right, moving on then, let's shift focus to the auto space then. And Kunal, from the passenger vehicle segment, the performance that we have seen from the likes of Tata Motors and Mahindra Maruti is definitely not catching up to that. It's been an underperformer in the passenger vehicle space, and look at the share price movement as well. It's today broken that 10,000 mark as well. Is this a shorting candidate, or will you be looking to buy this at dips?
So as you rightly said, it's a shorting candidate since September 2023. So far, this counter was managing to hold around 10,050 to 10,000 kind of levels as a support level, but decisively breaking below that level in today's trading session, trading at around 9,920. I think the selling pressure is building upon the counter. One can certainly initiate a sell on this because of head and shoulder formation. The stop loss can be 10,300 and the first target on this can be 9,450 to 9,500 kind of level.
Okay, shorting candidate, that's Maruti Suzuki for y'all. Let's move on, talk about the OMCs, Ankita. Why are these OMCs in focus today? Whether you look at an IOCL, BPCL, HPCL, what's the news for you today?
That's correct. The OMCs are in focus today on the back of brokerage notes. Two brokerages, Morgan Stanley and JP Morgan, have come out with the note on the three OMCs that we have, IOC, BPCL and HPCL. So let's get started with the Morgan Stanley first. IOCL, they're maintaining an overweight and they've hiked the target price to 191 rupees from 111 rupees. On BPCL, they are maintaining an overweight and hiked the target price to 644 rupees from 485 rupees. And on HPCL, they're maintaining an overweight and hiked the target price to 555 rupees from 364 rupees. Now, according to them, they're turning more bullish on OMCs and see a 30% upgrade to the street estimates. Multiple catalysts every quarter in 2024 for HPCL and BPCL with improved balance sheet quality and higher dividends is what Morgan Stanley is seeing. Now let's look at JP Morgan. JP Morgan is saying for BPCL they've upgraded to overweight from neutral, hiked the target price to 615 rupees from 400 rupees. For HPCL, they've downgraded to neutral from overweight and they've hiked the target price to 375 rupees from 330 rupees. And for IOCL, they are maintaining an overweight and hiked the target price to 155 rupees from 110 rupees per share. Now, they feel that the current elevated profits from the OMCs are unlikely to be sustained. They also feel the retail prices for petrol, diesel can be cut to reflect the lower crude, and they retain a positive view on the space as the stocks are inexpensive even as even on normalized earnings. And on the back of this, IOC, BPCL and HPCL are all in focus. BPCL is up 0.9% and HPCL is up good 2% in trade today.
Absolutely. Let's keep an eye out on all those OMCs today. But another FMCG name that's in focus on the back of its Q3 update, it's Adani Wilmar. When you look at it for Q3 FY24, Adani Wilmar's operational update indicates an overall volume growth of 6% for the company. However, when you're looking at it in terms of lower pricing for edible oils, that is in line with a fall in the cost of raw materials. Obviously, these are crude edible oils as well, the derivatives coming in on that front. That has resulted in a revenue decline of 15% because of that. Now, this is on a year-on-year basis that we're talking about in the operational update. Now, the edible oil segment volume stayed flat on a year-on-year basis in Q3. That was due to the subdued demand from institutional clients, but the business declined 21%. While let's talk about the food and the FMCG segment business, that grew by 28% and the volumes over there jumped by 18% for the quarter. And industrial essential segment, the business saw a flat growth but volumes increased by 15%. So quite a mixed performance that came in from Adani Wilmar. A lot of factors that impacted in terms of crude oil as well, and that is the main reason we're seeing today the stock is also down almost 1.7% as we speak, Shrishti.
Okay, moving on then, and from the auto space, let's have a look at TVS Motors, because in the weak market, this stock is definitely seen to be flying high, very near to its all-time high levels. The last time I checked, the stock was actually up by 3.5% uptick is what you are seeing on the screens right now for TVS Motors, and that's after the company announced its new capex on the state of Tamil Nadu, wherein the company said that they're gonna be investing around 5,000 crores in the state of Tamil Nadu, and they have also signed an MOU with the government of Tamil Nadu for this particular investment. They're going to be putting up a plant for this one. The company will make an investment of 5,000 crores in the next 5 years. That will actually create jobs of 500 people, backed by the facilitation from the state. And on the back of this particular announcement, Discounter is seen to be buzzing. Discounter was one of the strongest candidates in the auto space despite all that we have seen in terms of the sales, and definitely TVS Motors EV sales has been doing pretty well. The kind of volatility these Eicher Motors, Bajaj Auto and Hero MotoCorp has seen, but TVS Motors has seen a one-way run up, and the stock is seen to be holding on to the gains even in today's market as well.
Okay, that's TVS Motors on the back of news flows as well as some update that Shrishti gave us. Compared to other players, it managed to hold on quite strong. But Kunal, TVS Motors, like Shrishti was saying, held on quite strong. What's the view now on the charts as well? Last 6 months, 52% to 53% return. What's the view now on this one?
So, interesting observation. What we have seen on the chart is that the counter, which is in trend, just continues holding on to the trend, right? So, TVS Motor was also one of those counters. In fact, on 13th of December, this counter made its all-time high, and since then, it was in sideways consolidation. The high was, I think, around 2058. In today's session, it managed to give a new breakout, 52 weeks high, all-time high of 2062. I think this broader consolidation of a month is now coming to an end. One can still initiate a buy at the present level. It's going to be a trading bet with the stop loss of around 1980s, and the first target from here can be almost 10% up, which is almost 2200 plus levels.
All right, moving on then. Another counter that has seen a great move in the past 6 months, that is SGVN. And Ansh, take us through what's the latest news flow on SGVN then.
So the company's subsidiary SGVN Green Energy has signed a power usage agreement with Uttarakhand Power Corporation for supply of 200 megawatt solar power from the 1000 megawatt Bikaner solar power project in Rajasthan. The project, costing around 5,491 crore, is set to be commissioned by April 2024. The company aims to expand its renewable energy portfolio, targeting 25,000 megawatt by 2030 and 50,000 megawatt by 2040. Also, if we see the charts, despite stock trading around flat levels, prices have still managed to give a breakout from its cup and handle chart pattern. Also, stock is forming higher lows for 10th consecutive months now, which keeps the bias positive.
Surely keeping an eye out on SGVN. Let's move on, and at stock number 50, we're going to talk about Piramal Enterprises on the technicals. Kunal, Piramal Enterprises, what's the chart now indicating for this one? Where do you see it headed? Currently, last 6 months, very, very muted in terms of performance. Going forward, is it like a turnaround story on the charts?
Certainly, yes. So since September, this counter is down by, made a bottom at around 880, which was almost 22% down from the September peak. And now it's in sideways consolidation. The volumes are increasing really good, and it's been almost 15 to 20 days. This counter is making clear higher top higher bottom formation. So with the stop loss of around 920, one can certainly initiate a buy at the present level. Though the breakout is pending, which is placed at around 960, I think this can be a good risk-reward ratio to initiate a buy at the present level. Above 965, one can expect the targets of almost around 1025 to 1040 levels.
All right, then moving on, and let's talk about Titan. And Ankita, Titan did come out with its Q3 updates. Tell us, how are the numbers panning out for the third quarter?
That's correct. Titan has come out with its quarter 3 numbers, and also there are 2 brokerage notes that have come out. But first, let's look at the quarter 3 numbers. Titan has announced a 22% year-on-year growth in the revenues for the quarter. Now, the expansion is well diversified with a robust performance observed across most segments during the quarter. Now, they have added over 90 new stores in October to December quarter, taking the entire retail presence to 2,949 stores. Now, Titan has reported a robust 21% growth in the domestic sales for its jewelry division, attributing it to substantial increase in the number of buyers and a modest improvement in the average selling prices. Also, notably, the growth of gold, plain and coins during the festive season outpaced the studded sales growth, indicating heightened consumer interest in gold despite the elevated prices and market volatility. Now, Morgan Stanley is maintaining an equal weight on the counter with a target price of 3,190 rupees. Now, they see strong jewelry demand trends versus the general sluggishness in the discretionary demand. Also, 20% growth for the 4th quarter in a row, they say. Strategy for regular gold exchange programs is working out very favorable for the company. HSBC also is maintaining a buy on Titan and hiked the target price to 4,200 from 3,900 rupees. Now, we see the quarter 3 jewelry sales have grown strongly to 23% on a year-on-year basis, ahead of their consensus estimates, and they see strong and consistent results, reinforcing Titan's structural attractiveness. And on the back of this, Titan is in focus, currently pretty flattish in trade, trading towards the day's lowest point.
All right, but moving on then, and let's shift focus to the insurance space, because with Narayan Hyderabad receiving the license to be the 6th health insurer in the country, sources say that 4 more applications in the health insurance space are pending with IRDAI. Anurag Shah has more details on this one, so let's go across to him and find out. Take it away, Anurag.
So Narayana Health has got a license to start their operation, and with this, Narayana becomes 6th health insurer of the country, standalone health insurer. And as per our sources, there are 18 more insurance license are pending with IRD at various stages. So these 18 licenses include life insurance companies, general insurance companies, and standalone health insurance companies. So among the 18, there are 4 standalone health insurers has applied for the health insurance companies licenses, and the 4 names are Galaxy Health and Allied Insurance, Loop Health Insurance Company, O-Care Health Insurance, and Prudence Health Insurance Companies. So in case of Narayana, we have seen that they have applied for the license in month of July, and they got the certificate to start the operation in month of December only. So it took less than 6 months. So going ahead, we'll see more number of health insurer venturing into the system because the recent regulation of IRD also says that there can be 9 standalone insurance company which can tie up with the corporate agents like banks and all. So presently there are 6 only, so there is scope for 3 more companies, and 18 applications are pending. Among the 18 there are 4 health insurance applications are pending with IRD at various stages.
Okay, Anurag, thank you so much for that. So interesting update coming in. We could expect more entry, after Narayana and Rudela. Other ones also could be coming in this health insurance space as well. Thank you so much for that, Anurag. But on that note, let's just slip into a very short break. Don't go anywhere. We'll be back with more stocks after the break.